Hey guys, what's up? Welcome to another episode with me, Shashank Udappa. And in today's episode, we are going to look at, is IT sector a trap? Is it actually going through the dumps, or is there a hidden opportunity that many people are not seeing because we're also negative about the IT company? So today I'm going to quickly run through the entire setup, and I'm going to show you some very interesting facts that I've actually found where I believe that there might be a contra play here. But let's quickly run into it. This is mainly for long-term investors and even for swing traders or momentum investors. Do have a look at this video. Before we start, I don't know how many of you all know this, but we have two small cases. One is the Fluid Q basket, which has been performing really well and beating Nifty over a long period of time. This is our momentum basket. And we also have a Fluid C, which is a long-term compounding basket. But for people who are also interested, we also have mutual fund baskets as well. So if you're interested in this, I'm going to put the comments in the comment section. I'm going to put the discount code and all of that for you guys. Okay. Chalo, let's begin. Now, the first company I want to talk about, I'm only going to talk about the big guys. Okay. Because I'm seeing a very interesting play happening here. Now, companies like TCS, okay, obviously, if you see the stock price has taken a massive beating. As you can see, it's only going down. In fact, from the peak, it has gone down almost 50%. Can you ever believe that a company like TCS has gone down 50% from its peak? And that is what is very shocking. It was earlier at almost 10, 12, 13, 14 lakh crore company. Now it's an 8 lakh 84,000 company. And all this is because of cloud code is coming in, this is coming in, that is coming in, and full disruption is happening. But I'll show you some fun facts here also. Okay. The company obviously is trading at 17 PE, which is very, very, very low for this company. And if you look at the dividend yield, is currently sitting at 2.44 because the company is still making money. The company already has enough money in the bank account. It is still growing. In fact, if you look at the current results that came out recently, it has got a growth of 9.65%. So the company is growing. So that means the PE ratio will not go up suddenly because of a bad result. If the results are good, the P ratio will only go down, and one squeeze is getting created. Now, for all the things that people say that IT is not doing well, there is growth happening. Yes, it is not growth at 10-15% that Durandars will like, but it is not bad growth. And these guys are sitting with huge balance sheets, giving insane amount of buybacks, insane amount of dividends. Look at the dividends again keep coming in, and because of that, it has become a very attractive pick for many companies because now they're buying only for the dividend income at 2.6%. Now, I don't know how many of you understand how dividend income works, but dividend income also compounds over time. Okay, it is not just this. Dividend yield and dividend income also compounds a lot over time, because if this company then goes up to, let's say, 100% return, goes back to where it was all-time high, then the dividend yield that you bought it today was 2.44. At that point, your dividend yield will be almost 5.6, which is equal to an FD, which is crazy. And what TCS is saying, that now they have started doing something called AI services. And what is AI services? They're saying that, look, even if AI becomes very big, you still need someone to do the servicing in AI as well. So we will come there. We are upskilling our engineers to become AI engineers, and that is where we are going to play the future game. And that is what TCS is talking about. Now, if you look at, let's see if there's some good research behind it. You can see the recent result. Okay, Motilal has come out with the result. 9th April ka document hai. Not good, but not great either. This is exactly what I told you, that it's not bad. That means the P ratio is not going to go down. The P ratio will, the P ratio will not go up. It will only go down, which makes it more and more and more attractive. The problem is growth is missing, right? Growth is missing, which is very phenomenal. Growth is missing, and hence the peg also will be bad. But if you look at it from a long-term standpoint, it is I would say, steel deal sitting at 2.6%, dividend yield, only because this company is the company that grows the fastest out of all the other players. Now, if I show you another company, let's say your Narayan Murthy's company, Infosys. Infosys is sitting at 15 PE. 15 PE, and that's not even a fun. That's not even the interesting part. Infi today, obviously, because it has so much cash, Infi is sitting at a dividend yield of 3.67%. This is more than my rented house that I'm getting in Bangalore in Devnalli. In Devnalli rented house, I'm getting 3%. Here I'm getting 3.67%. Which is crazy. Yes, stock price only problem is stock price has gone down so much, whereas my Devnalli flat keeps going up. But if you look at the stock price, it is currently bottoming out. It is literally sitting at 15 P ratio, very close to the bottom, right? Absolutely at the bottom, median bottom. So this is something I'm looking at. And if you look at the profit and loss statement again, Again, over here, we will see that it gave a 13.38% growth. So growth is happening both on the top line, growth is happening, EPS growth is happening, dividend growth is happening, buyback growth is happening. So look, there are two ways you can play it as an investor. One type of investor is looking at all the negative and you will believe the negative and you will also become negative. The second type of player is contra, someone like a Parag Parekh or Kenneth from Old Bridge. They are contra players. They will look that the whole world is negative, but they see value even today and they go and take some positions, right? Again, please note, I'm a SEBI registered research analyst. I don't hold these companies. I was just going through them and I found them very, very, very interesting because of this factor. And if you look at Infi as well, Infi also obviously has taken a nice nosedive. And if you see how much Infi has fallen from the top, they have gone almost 42%, less than TCS, but they have gone 42%. But Infi usually doesn't grow extremely fast as compared to TCS. TCS usually grows faster from a compounding standpoint. Infi grows second fastest. But this is very, very, very interesting because I would still bet on a TCS rather than an Infosys. If you look at Infosys, they're still very slow in adapting. TCS has realized, boss, we have to adapt, we have to go up. Infosys has not realized yet. They're still in Delulu land. And if you see that, as Motilal has said, they still have a tough road ahead. Still, the target price is buy because it has come to a very cheap point. 15p is crazy, right? Obviously, in the future, we will come to know they will figure out something and they will come back and they will say, okay, we've done a good job. But definitely, they still have some pressures, whereas TCS does not have so much pressures. Then we have another company, third IT company. Look at this. 5.49 dividend yield. What is that? 5.49 sitting at 16p. This is your friend Wipro. Wipro also has gone down from its peak. Wipro, at least one good thing is Wipro doesn't give hope that it grows. It doesn't grow at all. So dividend yield itself is 5%. Even if it grows at 6.85% CAGR and you have 5% dividend yield, you will make a lot of money just on dividend and average growth itself, right? Whereas TCS at least has a higher percentage of growth. If you look at HCL is at 4.45% dividend yield. Again, 18 PE ratio, and HCL at least grows 10-year CAGR is 12.3%. So HCL is at least a grower. It is not bad. But where the gem is now, I'm just showing you large cap. Large cap itself has so much crazy ability here. But if I go and only look at all the IT companies, trying to look for more gems, let me show you more gems. Okay, look at the dividend yield. Okay, look at the dividend yield here. Tech Mahindra is sitting at 3% dividend yield as well. Persistent and Coforge are growing, so they're not giving good dividend yield. They didn't fall too much as well, sadly. I would have wanted them to fall more, right? And then if you go down here, very few companies who are actually good are there. Now we get into the micro cap, so we don't care about this. So the game is being played here only, where I would say honestly that Tech Mahindra is also not a bad option at all, 3%. But if I can choose between TCS, Infosys, HCL, Wipro, Tech Mahindra, I mean, obviously Persistent, Coforge are the growers, so I would not worry about that. But that's why they're also sitting at 40p, whereas the market leaders are sitting at 17, 18p. So the top four are literally sitting sub 20 PE, which is unbelievable. But again, for me, the most interesting is still TCS at 2.44, because if this P goes back to 24, 25, this 2.44 becomes 5% for me. So it's a no-brainer. That will pay off a lot of things, right? Infosys still a slow grower. HCL is not a bad option at 4.55, because then your dividend yield, if it doubles, becomes 9. So that becomes a very interesting pick. Yes, see, look, narrative is there. Obviously, narrative is negative. I'm not saying narrative is positive. It is still negative. But the guy who takes advantage of this is where the game is, right? Always, I had read one part of Warren Buffett's thing that there'll always be bad negative narratives against a company. But one question you have to ask, does this kill the company? So if I ask my question, does this kill TCS? Answer is no. Does it kill HCL? Answer is no. They will figure out something. They will acquire some company and they will revamp themselves. So the answer is no when the point comes that will they kill themselves. So that is where I'm very bullish now, that with INR depreciation and growth, all of this happening, I think AI and IT companies will do a massive turnaround, and then all of us will be like, oh shit, we missed out on the bus. And this is like how ITC didn't move in the past, and then suddenly it moved. HDFC is doing the same thing. IT companies are doing the same thing, and because of these companies, your Reliance is also not doing well. Because of this, your Nifty is not going up because your IT is down, HDFC is down, and Reliance is down, which holds major portion of your Nifty. In fact, if you see mid and small are now coming back. whereas the large cap is not doing well. But this is what it is. So yes, there is an opportunity here. I am not negative on IT. I know the world is negative on IT. I am taking a contrast stance here and saying I am not negative on IT. I feel they will do a turnaround. They are the smartest of the smartest guys in India sitting there trying to figure it out. And I'm sure they will figure it out. Imagine even after all this, they've not got degrowth. They're actually growing at 9-10%, which I'm still fascinated by. It's a matter of time when someone will be like, oh my God, this is deep value. Let's start buying this like there's no tomorrow. But this is something I wanted to show for long term, guys, because the 3%, 4%, 5% dividend yield is just unbelievable, right? It's crazy. But these are very rare opportunities you will see in the future. In the next 10 years, you will look back on this time and be like, oh shit, that is basically what we look at. Again, if you have any doubts, any questions, put in the comment section below. And if you're interested in the small cases, I will put the link as well. We have mutual fund baskets, we have compounding baskets, and we have quant baskets. If you're interested in understanding more, this is something that I've been putting out here. I'm scheduling it for tomorrow. It's about Indian IT companies, the payers, the growers, and the stragglers. So there are 3 buckets where the large cap, mid cap, and small cap are there, and a lot of information here. So if you're interested in joining this, you can give it a shot as well. Awesome. Take care. See you guys. Bye bye.